Hello everybody, I'm Giuseppe Basili, also known as the Fib Stalker. Welcome to this daily and intraday video review. Today is March 28, 2018, and it's 15 minutes to 3 p.m. EST time in Toronto. This video is part of the Fib Stalker analysis and trading service. As usual, I'll ask you to, if you have not done that already, to read the disclaimer. So pause the video here, please read the disclaimer and accept it. Past performance is not indicative of future results. Trading Forex carries a high level of risk and may not be suitable for all investors. Thanks for doing that. And let's dive into the markets. We're going to start from the dollar index here, and obviously finally something here is happening, and this market has been hovering around, and we know that this reversal they may take several weeks, sometimes months, and we saw this in the past whenever we turn from upside down to downside up, and it takes time. So at this point we could still have resistance above here, and although this 50% is not held here, and we know that when the market turns, markets can be very, very jagged, and actually they are not technical. The reason for that is there are also other players, and there is all the dump money that sees this move lower, and they believe that this market is continuing lower, and that's the reason why this level might hold sometimes and sometimes might not. Obviously with this strength now we can anticipate a continuation high, at least for some time here. This is still a range though, so at least we need to break the 90.46. Okay, so this is important. Obviously it's affecting all the other pairs, and before we get into the major forex, I want to review the SP500. There were some questions as well in the room. Now this market, we mentioned the fact that in this wall range here, the bears here have not held. They were not capable of responding to this price move higher with a continuation lower. The 61.8% level has broken. The opposite, the longs here, initially they were able to hold this price, but eventually that level also failed, and we know that in a range 50% rarely hold. They might hold temporarily, but eventually they break. So what's next for this market here? This market has been trading here in extensions, and it has actually targets below here. Now you can trace these using the weekly levels or the daily levels, it doesn't matter, it's in a range, and the daily notable anyway didn't come into play here. Okay, so the actual notable is the weekly notable here, you can see on the weekly. But however you trace this move, we're concerned what's going to happen next. We have this level here, the 2527 that has been tested before, and this is going to come into play again. The setup is there, the short is there, and there is also another level here that might come into play, 2474. If you're asking how we are getting these levels, we need to go back to the weekly time frame and look at the sequence of measure moves on these time frames. So we used two levels. The first one was an extension. Both levels are extensions. The first one was an inner extension here, from the highs to whatever new highs were printed. Okay, and this extension never came into play. It only came into play when we had these two moves, these 2 weeks move at the beginning of the year. Okay, now when we look at the larger time frame, we also have to consider that there is also a larger sequence from the high, an aggressive move from the high to whatever new high here, and as you can see also this has been participated, which suggests that there is also the high of 2015 here that might come into play, and that's where we get these two levels. Okay, so the first test is going to be 25.31, the second test is going to be 24.81. You know, the market might bounce, might have a tradable bounce at both of them, so we'll need to test those if those levels come into play. But as you can see here, the setup is there. Okay, gold and silver of course have followed suit here with what has happened in the dollar. So we saw this ugly reversal. We were looking for the continuation higher here, but obviously as the dollar has reversed, this market also has reversed on the opposite side, and now a 1309 test is in the card, and that's where we could see also initial initial resistance, corresponding resistance for the dollar index. Okay, that's the 1310. That's the level that could be retested this week or within the beginning of next week. Silver has been much weaker than gold, and obviously it's selling as well here, as we can see. And you know, the only trace that it's actually the only two traces that are meaningful are the 1896 and the 1692, and they both have targets below. Okay, the closer target is the 1577, so nothing has changed when it comes to silver. Notice that, you know, the method does not give any indication about the time, how long this might take. Okay, and that really depends on a number of things. You know, how other markets move, whether there is smart money and dump money, and here smart money as always leads, but then the move might take several weeks. Okay, so not necessarily. So sometimes, I mean, it's good to take profits, and if the market starts moving sideways, there might be opportunity to play the market on this. If the sideways happens on the larger time frame, it's possible to play this market. But there are much more interesting markets to look at. All right. So let's start from the Australian dollar, US dollar. This market is hovering around the first target of a 50% retrace that also played many days and weeks ago here. With the dollar index moving laterally, we saw kind of a lateral bias for all these other markets. Okay, however, this might change now. The first target was hit last week, and market has been hovering around that level, which is also previous congestion area here. And what we're looking for now is, you know, in the coming weeks, a continuation lower, days and weeks, a continuation lower into 75.30. If that happens, then we would actually trace the next measure move lows to whatever new lows are printed. And the idea here is to actually keep helping this price down into that first 50% retrace on the larger time frame that has not been holding before, but then in April last year it started holding. So we should get a bounce around these previous lows here, and then possibly a continuation lower. That would be a very technical move, and of course it's something that we can participate in time if that's the way the market is going to play out. The euro in the last few weeks has been on the larger time frame a total nonsense, as you can see here. You know, range 1, 2, 4, 5, 6, 7, 8, 9, more than 2 months, actually 2 months worth of trading range here, and trading ranges are good. Eventually market break above or below, and they start moving very quickly. So there are opportunities. There are gonna be opportunities possibly in the coming days. Okay, and the sideways activity here was also identified by the fact that bulls and bears were not holding their promises here, and actually they broke the respective 61% level. So of course, what we want to look at now, and this range condition might still continue for a while. We still don't know how the dollar index is going to play that, but ideally, a retest of the lows and then possibly an entry, and that entry might come from an extension short as well, depending what's going to happen in the next on the following week here. That could be something that we could capture as an extension as the market moves lower, right, to retest previous lows here. It could actually come back and trade the next extension short. Okay, so we anticipate a little bit of bullishness now in the dollar index. We don't know how long this is going to hold, and we always have the sequence of measured moves that can that help drive us, and this is an extension. So in the dollar index, something I have not mentioned before, the next participation from shorts could come at 92.77. Okay, so that's something that you want to keep in mind in order to be able to trade this market and see when they reverse. So these markets also will not possibly go straight down here. If we get any 50% retrace, even if the market prints lower low here, those 50% obviously would be great opportunities for entry here, and so that's something that you wanna keep in mind as well. Okay, I'm talking about any retrace, and of course if this market prints lower low, you want to update the 50%, and that's the kind of action, low risk action that we want to look at. If this market continues moving lower, we're going to use extension short in order to capture the next measured move. Okay, so there are no setups at the moment, and I would wait for a retrace before getting involved in this market. US dollar Canadian dollar is actually reacting higher as well. This market has been reacting lower from an area of shorts here, highs to lows on the weekly. This area has acted as resistance, and we'll now need to identify what's the level that is holding this price. Knowing the level is always important because it allows us to plan for future developments here, and with the dollar index attempting a reversal here, I would say quite successfully, then we need to understand what is going to bring this price higher. Could be an inner extension here, and even if we identify that after the fact, if retested, this level would be a good level to time on the daily time frame for a continuation higher. On the smaller time frames here, we had first 50% in play, lows to previous highs here as fine participation, and that first target as well, and the next measure move failed. The market came back to trade the 50% long. Okay, That's what we see here. Always check the smaller time frame. So there is a setup here, participation of 128.73 into 129.60, which is the first target. The 50% long has worked well also. They are next in the sequence here, and has worked well also in this market, and you remember that we had a very technical market, 50% lows to highs to first target. The market came back to trade the next measure move, lows to highs, and it dipped into the area, so it was a dirty setup here, but eventually once it came out, there was an indication that this market was ready to move higher, went to trade into resistance, and then back in the morning almost retested the 50%, and now decisively moving into the first and potentially even the second target of this 50% long. Okay, so you always have to follow the sequence of measured moves because those are areas where we anticipate participation, and when the participation comes, as you can see, these moves are very, very quick here. And there is now the potential to hit 096.22, 097.10 in a continuation higher. The Japanese yen is also weak here against the US dollar, and we're seeing the weakness all over the board for this market, and that strength could actually bring and so the strength of the dollar here could actually bring this price much higher here. One possibility would be the full 50% here around 109.68. Okay, so this market will retrace and offer additional opportunities here. The inner measure move, the 50% traded 105.30, 105.24 here, 105.29. So this has traded, brought price into the first target, profit taking. I had traced next 50% move, but the market never came to test that level. Okay, so if this market comes back now, 106.43 is going to be the next opportunity long to that we need to be aware of here on the 4-hour time frame for a continuation higher. That's what we are looking for in this market. New Zealand dollar, US dollar, weak and trading between extension long, weekly extension long. We can see that on the daily as well, and here it is, the highs to new highs here that traded, locked that level, which was retested once, twice, so 3 times, and the market then after the third test came to trade a 50%, full 50% short here, and that's what's trading at the moment. So very technical market at the moment, trapped between the 50% daily short and the weekly daily long. So this could come into test, but there are also targets below here in an environment in which the dollar is strengthening. So that's what we would look at. Now, interestingly enough, in this market might offer very good opportunities going forward. Why? Because this is a range, and we know that in a range 50% are rarely going to hold, which means that after we clear out this last area of resistance here, then we could actually go quickly into 71.04 or 71.08. The level might not hold or might only hold temporarily to offer us an opportunity for continued short. Okay, so finally this market going back to being technical here, and because of the move that we saw in the dollar index, took weeks basically to complete on the larger time frames. We're now in a condition where we could start seeing more um, quicker moves here. And US dollar Singapore dollar, which I use as a proxy of the dollar, lots of resistance here, but eventually this market is also coming coming up here, and we saw a potential 50% here, and that as held, and so we have targets above 131.36, and then on the 4-hour time frame, if that level is hit or exceeded, then we're gonna chase the next measure move, whatever next measure move we get. If we get selling right at that level, the 31.20 level is gonna come into play, but I'm not gonna leave it there on the chart because we need to see where the relative high here will be printed. Okay. Some other ideas here of what we could say going forward. Pound versus Canadian dollar seems an interesting setup long here forming. Of course, this is gonna this is gonna actually take potentially a few days or weeks to come into realization here, but the idea is that this market is still in an up move, and yes, I mean there is participation from short there, but those shorts will need to prove themselves, and the 79.39 area here, it might offer a little resistance. Obviously, if the 78.25 pierces, then we are even in a more interesting scenario, because at that point, we can go back to lows here 160. So either scenarios, are going to be very interesting in this market. New Zealand Canadian dollar, similar situation here. I'm using the weekly and notable here as a level to where this market could actually find participation. Note that this is a big range, but the top of the range has not been reached yet, so this market could actually in the coming weeks go back to the 09220 and potentially give us 450 pips here. So these are some of the ideas you wanna keep in mind going forward. As I mentioned, the Japanese yen is strong on all the board here. There is a 50% trading here. There'll be resistance in the Canadian Japanese yen at the 83.65. We'll see whether that is going to be broken and the market comes back. Then we're going to start playing this market on the upside. And similar for the Swiss franc here. The difference on the Swiss franc is that there was no 50% that really traded here, and the high to new highs is the only level that traded, but this market is less technical here, so we need to definitely consider that level. Although when we look at more closely, we see that the level that's not really traded. I mean, there are 30 pips of difference there, which means that the shorts on the larger time frame are still being controlled here. And if the market gets into this area, we could see a test of 110.16 and potentially even lower. But before we can say that, we will need to wait and see what happens. Okay, so I hope this helps, and as now the dollar index starts behaving here, and potentially once it's cleared out this area, this up move here, it's very, very strong. It actually it has the pace, it's twice the pace of the last move lower here, so obviously that indicates strong participation. And we have not, just to before closing here, looking at the current move that we can use to model this price. Is the same as the US dollar, Singapore dollar, of course, with market trade 50%, tested twice into first target, second target. So now, if and when this market will come back, we know that we have to trace highs to whatever new highs we have. Okay, so thanks for watching, and I'll see you in the room. If you have any questions, you can always ask them there, and I'll comment on your charts as well. Thank you. Bye bye now.